All right, hello, good morning, good evening, and good night. I hope you guys are doing absolutely fantastic because today we're going to be talking about the Yieldmax funds. More specifically, are the Yieldmax funds sustainable? Do they pay out too much income to be sustainable? That is going to be the question we're going to ask. But today I have three examples. I got TSLY up here. I got CONY, even though you can't see because it's all blue. Let me see. CONY, there we go. And then I also have APLY up as well. And so today what I want to talk about is, do the Yieldmax funds pay out too much income in order to be sustainable? I have all the stock charts up. We're going to go through them and I'm going to show you an example of why I do think APLY could potentially be the most sustainable Yieldmax fund. Obviously, I actually did not look at the Google or Facebook funds, but I'm going to use APLY as an example and you guys can apply it for yourselves and check out all those other Yieldmax funds. So in today's video, that is a question we're asking. I want to say thank you to everyone who subscribes. Guys, look at this. We got a 4 in front. We got 4,020, not 420, but 4,020 subscribers. And I want to say thank you to everyone who made that possible. Absolutely smashed it on the last video. So thank you to everyone who watched, who commented, who liked, enjoyed, and subscribed. So I want to say thank you. Now, let's get into today's video. So today, do the Yieldmax funds pay out too much income to be sustainable? Well, look at it at the first place. We're talking about a 77% dividend yield and CONY with a 100, we'll call it 170%, 168% dividend yield. Now, APLY is no slouch either, still paying a 35.5% dividend yield, but we're asking the question, do they pay out too much to be sustainable? I think in TSLY's case, I do think, yes, they do pay out a little bit too much to be sustainable. And the reason being is because the underlying stock, which is Tesla for TSLY, has not been able to appreciate over time well. And so it's caused a pretty big decline in the stock price. Now, for the Yieldmax funds, if you guys are unaware, you could read their prospectus, but the funds, they take all of the downside and are limited on the upside. And TSLY is kind of a little bit of a good example of that. The stock price started at $20. It's now down to $8.72. Keep in mind, Tesla, the underlying stock, is in a downtrend. It's at about $186 currently. So it is far below all-time highs. If we were to see a rebound in Tesla, we'd see a rebound in TSLY's price. But currently, this is the current price, and this is how TSLY has performed. It's been pretty downward. And over the course of its kind of Yieldmax ETF journey here, it's been paying out some pretty big dividends. We're talking about 80 cents, 44, 80, $1, 83, and then kind of about 50 to 60 cents here for the last little while. Now, if Tesla was to recover, then it could potentially match the dividend payouts and could potentially become sustainable again for the immediate short term. But I think long term, I'm not so sure that TSLY is sustainable. And I'm sorry to burst everyone's bubble or anything like that. I'm honestly not even bursting bubbles because I'm just a guy on YouTube and I'm just sharing my opinion on TSLY. I still hold TSLY. I still will continue to hold. I might actually look to buy some more, but that is just kind of my little opinion right there. Now moving to CONY. CONY has an even greater dividend yield, almost double that of TSLY. We're talking about 170%. That is a huge dividend yield. Where else do you see 170% dividend yield? Maybe other than Zim integrated shipping back in the day. Now, CONY, some people could argue it's decently sustainable. Look at the dividends that it's paid out. And let me get to it. Hear me out on this one, okay? So the dividends that it's paid out here, we're talking $1.20, $1.40, $1.70 pretty much. These are huge dividends. And where did CONY's stock price start as a Yieldmax fund? It started at $20. We're only about 21. I was reversing there. 21 cents below the inception price for CONY, but yet it's paid out these awesome dividends. And the real reason, obviously, being the underlying stock coin went through a massive uptrend, and CONY was able to capitalize on this and pay those insane dividends. Now, what you could do, for example, is if a stock is paying insane dividends and going up like crazy, obviously it's very difficult. You can't really time the market. I think it's very difficult to do that, even though you could, obviously take profits along the way. But if you see a massive increase in any kind of Yieldmax ETF, for example, I know once again, it's very difficult to do this, and sometimes it's hard, but what you could do is if you got in at a good price, you buy at a good price, you can take profits along the way and look to buy in at a lower price if you wish to do so. Understanding when they pay the dividends, which if you follow my channel, I can definitely keep you posted on all kind of like ex-dividend dates and payouts and everything like that. But CONY would have been a great example where you could have bought down here at $19. You could have received all these fantastic dividends, probably the dollar dividend, $2.46, and then $2.69, riding it all the way up. You could have potentially sold for a good profit and then could have bought back down at these $19 levels. Obviously, that is the best case scenario. Comment down below if you were able to do that, but that is the best case scenario. Very difficult and obviously emotionally driven. You try to keep emotions out of investing, and you have to remember to do that. It is just a stock. It is a company. You have to look at the sheets. If you think it's getting overvalued, maybe it could potentially be a good time to sell. So in this sense, CONY, with the dividends that it was paying out, even though it was paying out super high markers here, it could have potentially been sustainable if Coinbase, the underlying stock, could continue or even slow down in the run. But obviously, is that really going to happen? I don't think so. And so the question is it sustainable or is it not? I'm going to leave that up to you guys. Personally, I think the dividends that they were paying out were a bit unsustainable at $2, but if the stock continues to trend up, then it could be sustainable for a short period of time. But now we're talking more long term. We're talking about APLY, and APLY is a good example of a Yieldmax fund, which has been relatively stable. All the Yieldmax funds start out at a $20 share price. Some definitely have dropped more than others, but APLY is currently sitting at about $19, so $18.94. And you can see here over APLY's kind of history here, they started at $20. Keep this in mind. They're only down about $1.06 currently, and they've paid out, look, 28 cents, 63 cents, boom, 55 cents. At the third dividend, you have already made your money back if you were to have bought APLY at $20, but then you continue to receive these dividends, 22 cents, 47 cents, 17, 46, 47, 56. So APLY is one of those stocks where the underlying stock, Apple, has appreciated generally well over time. Even in the kind of current time period where APLY has been, it's been a little bit of a rough road for Apple, the underlying stock, yet still, APLY has still done actually decently well. I'd say actually remarkably well, just due to the fact it's still paying high dividends, roughly about 20 to 30% on average, because APLY does pay a little bit less of a dividend on average than this 35%, but yet the share price hasn't taken too much of a beating. So potentially what you might want to do is, if you're still looking for high dividend yields, if you're still looking for Yieldmax funds to invest in, maybe potentially you want to look at some more long-term, slowly appreciating underlying stocks like Apple, like Google, potentially Facebook, even though I haven't really checked Facebook, so I'm not going to like really put it out there too much. But maybe look into this if you're looking for some great monthly income, but also a little bit less of a decline in the share price. Or if you just want to go crazy, you could buy CONY, you could buy TSLY, but obviously the decision is there for you guys. So this was just a little video on whether or not I feel that the Yieldmax funds are sustainable. Obviously, it's not fair to say, oh, the Yieldmax funds are all sustainable or they are all not, for example, because each one is different. Each one has different underlying stocks. And so that is something to take into consideration. Do you think the underlying stock will appreciate long-term at a relatively slower marker, or will it just go crazy up, crazy down? And if that is the case, then you might want to look to take profits when they go crazy up and then ride it when it goes down and then buy back. So I hope you guys did enjoy this video. We are up to 4,020 subscribers. So I want to say thank you to everyone who made that possible. Over 40 subscribers in the past day. So that is incredible. I want to say thank you guys for watching not only this video, but our other videos. And I hope you guys did enjoy, got some value out of this. If you did, click the like button, and I will see you guys in the next video.